So we talked about the risks involved in international trade, and then we walked through the process that started with a pro forma invoice, meaning us um, choosing to choosing a product and going forward with an actual intention to import the product. Then we went through individual aspects of the trade that involves payment, logistics, insurance, the description of the product, legalities, representation, and then intermediation. So then we said, which parties of the international trade transaction takes care of these individual issues, and we said that we're going to need a correspondent bank or two correspondent banks, one at the exporter's site or locale, and then one at our own location. And these two banks will be instrumental to our international trade transaction. So we said, what are the parties to an international trade? We obviously start with the importer and then the exporter, and then we have the banks. The banks is plural for the importer's bank and the exporter's bank. We have the logistics company, insurance company, the inspection company that will be, again, very similar to the exporter's bank and the importer's bank. We're going to have an inspection company that works primarily for the importer, but for the overall transaction. And then the inspection company will have their own agents at the exporter's location and at the importer's location. Then we're going to have government officials. If anything, we're going to have port authorities, customs, international transit countries that we have to go through. And I think one of the things that I didn't mention the last time was that, if we actually go through any sort of channels, like for instance, Gibraltar or Panama Canal, then you actually have those authorities get involved with the transaction. Permits need to be taken, payments need to be made, and we have to make sure that these are all accounted for. And then obviously for the representation and then the intermediation, we have the banks. The exporter's bank will represent the exporter, importer's banks will represent the importer, and then these two banks will be the intermediation. We're going to add one more bank to this, but probably either today or Monday when we talk about the actual payment of the transaction. Then once we figure all this out, we actually move on to an actual stage of the invoice. We basically go ahead with the purchase and we ask that the exporter would send us an invoice to initiate the entire transaction. And then with the invoice, we contact the exporter's bank and the importer's bank, and we draw up a contract. This contract usually is referred to as a letter of credit. The unique aspect of this contract is the jurisdiction and the enforceability. And obviously, we're concerned about how these contracts can be enforced. I mean, we include this is under the jurisdiction of such and such in this city, in this country, whatever. But that's usually a very lengthy and costly process. I mean, say you want to import something, say from Indonesia. Do you really want to sue somebody in Indonesia? And how would you actually go about it? Like, would you hire somebody there? And how long does it take? What's their legal system? And it's all foreign to me. So, it is, especially if you're going to be transacting, it's a multi-million-dollar transaction, then, these issues are significant, and not just, getting your money or not just getting your product, but also, how fast can you get it and how much it's going to cost you to get it and all that. So then we basically follow through the Universal Commercial Code, and through that we refer to the section about the letter of credit. So at this point, instead of writing a contract there, I'm going to change this into a letter of credit. So a lot of the times, letter of credit is referred to as a LC. Oops. And with an LC, we have now an internationally recognized um, contract between the importer and the exporter. And usually the letter of credit will include a contract with the logistics company, insurance policies, inspection agreements and inspection details, product details, the invoice, and then any sort of permits that we need to acquire, the port authority permission, reservation. If we're going to be using any warehouse by the port, then the warehouse confirmations. If there will be any sort of intermediary banks that will be used, which we're going to talk about in a minute, they will be spelled out here. And obviously, the letter of credit will be between two parties. We have the importer on one side and exporter on the other, and then obviously they are representing banks. So we'll have the exporters bank and the importers bank. So at this point, when we have the letter of credit, we need some definitions, right? So, like for instance, for the letter of credit, first of all, we need to know how long. So, how long will it take to complete the entire transaction from the day that we open the LC until the day that it actually is fulfilled? And we need to define, if there are any penalties for delays. If we need to, because this is an irrevocable contract that binds both parties. We as the importer cannot back away, and the exporter cannot back away. They have to fulfill their duties. However, there are instances where they cannot or you cannot, and there has to be penalties spelled out. Therefore, we would know within how long and what happens if we cannot fulfill it within that time period. We also have to define, so maybe I should just say penalties. As to, again, not specific to the how long either, it also can be penalties related to, say, delivery errors, reservations, and problems. I mean, there has to be penalties for everything. And it will be much, much easier to define all of this at the beginning of the letter of credit, at the opening of the letter of credit. And then with respect to the letter of credit, we also need to have a payment. This is an issue. We have to define how the payment will do and what happens if there's a failure of payment. And in which case, what happens if we cannot or the importer cannot pay, right? Because the letter of credit is the transaction altogether, and we're trying to avoid all legal issues. However, there are circumstances when we cannot fulfill our obligation. People default all the time, and so do the companies. So what happens if we have to default on a payment? So then we now need to talk about how we can have a confirmation of payment, right? So right here, I need to actually change this, and instead of saying payment, so perhaps I should actually say payment details, and then payment confirmation. So the payment details goes to with respect to when, and most of the time this is the major issue, and the payment confirmation is who, right? And then, so what do we mean by payment details when? So there are different kinds of commitments. On one side, you could actually have an importer who cannot pay immediately and who needs time to pay. So in these cases, we can actually have, and the exporter would agree to receive a payment after the exporter fulfills its own obligations. So for instance, let's say that we are a car dealership in New Orleans and we are importing cars from India or from China. And these are very special electric cars, and there are no distributors. So we want to be the first one to bring them to the US. We want to put them in our lot and we want to sell them. And then after we sell them, we want to pay the exporter. So let's say that it takes about a month for the cars to cross the ocean. And then we believe that we can actually sell these cars within the following 3 months. So once the cars are on the ship in China, then we will need about 4 months, and just to be on the safe side, say 5 months to pay for these cars. It still is a commitment to pay. However, we are asking for a 5 months deferred payment accommodation. So in this case, we actually refer to these LCs, letter of credit with a deferred payment, right? Um, on the other hand, the exporter may not be okay with this. The exporter may just say that, look, I'm delivering the cars to you, and as soon as I deliver them on the ship, my responsibility is done. And once I fulfill my obligation, I expect you to pay right there and then. So in these types of situations, the importer depends on what they want to do. However, if they are not in a position to negotiate, then they may have to agree to this. So if the payment becomes due as soon as the exporter delivers the cars to the ship, free and clear, no reservations, no problems, then we refer to this as at site. So the deferred payment refers to when the exporter is okay with receiving a payment um, after they deliver and after a certain period of time. And this time can be 2 weeks, a month. It literally can be 3 days. It could be a year. It is based on how much time the exporter is willing to help or provide for the importer to pay. However, it's important for you to understand the definitions here, that the letter of credit can be a deferred letter of credit, or letter of credit with a deferred payment, or letter of credit with at-site payment. And deferred payment refers to exporter allowing the importer number of days to pay after delivery, and at-site payment requires the importer to pay immediately upon delivery. And one thing that you need to also remember, that when we say delivery, we don't mean delivery in New Orleans. We mean delivery at the exporter's location, meaning exporter delivers the cars or the products to the ship, and the captain takes ownership and clears, and the insurance clears, um, the government clears. Everything is cleared. Then once that happens, the payment, or once the goods are deemed as on board, free and clear, then the payment becomes due immediately. And that type of letter credit is referred to as at site. So just to give you a recap of how that process works, when the product is ready for delivery, it will leave the warehouse, usually on a truck, and then that truck will actually take it to and usually in a container. And that's how the container business came about. We have two types of containers: 20 feet, 40 feet, and all that. So the goods will be put into a container. A container will be put on a truck, and then the truck will take it to the port, and then the cranes on the port will take it to the ship. Now, at this point, when the goods are at the port, it may be, um, subject to inspection. Now, there are several types of inspections that it actually can go through, and it all goes back to our discussion of issues. Well, at this point, first of all, we want to make sure that the goods are within the container, on the ship, or about the ship, and they are packaged as agreed. They are in the container as agreed, and they are in the condition as agreed. Then the insurance company, so the logistics company, will actually provide an okay. a document that says that clear and sign. And then at this point, insurance company will also can inspect. And what they're looking for is if there's an insurance fraud, they will make sure that the product is what is being agreed. It's not an empty container that we pretend to send, or we were pretending to send, these top of the line cars, but it is actually junk. So insurance fraud. So the insurance company want to make sure that everything is, as agreed. They also want to make sure that there are nothing that's overlooked, so that could cause any damage or any sort of claim on the insurance part. And once they actually say that their inspection passed, they also provide a little document that says cleared. Then we'll have the inspection company. And remember, the inspection company usually represents the importer. They're looking to see if the product being delivered is the product that's agreed upon. And at this point, and I, in so many years that I've worked in this, I've never actually seen an inspection company that's saying all is 100%. It's just like I bought and sold several homes till now, and I've never actually had an inspection report that says everything is in order. So the inspection company always finds something. So which may be good, which may be bad. However, when the inspection company finds something, say, you got a car and there's a scratch on the door. So, now it depends. Now, obviously, they have to report this. However, it may not be major enough to stop the transaction, but it may be minor enough to put a reservation for negotiation, in which case we as the importer will be notified through our bank, and they will basically take pictures of it, and then they will let us know that there is some imperfections, and the inspection company will report all of these in detail. And then, the exporter will also be notified, and the exporter and importer can negotiate. And then they may come to a resolution. If it is minor enough, then, the reservation can be paid off. If it is major, then the transaction can fail. We have to have fail safe in our letter of credit penalties. And they still have the responsibility and the requirement to deliver. They just failed on this time, and we may actually refuse or refuse to accept the goods. So this is very similar to a situation that I had years ago. I bought a refrigerator, and the fridge came, and there was a huge scratch on the side. And I said, well, this is all great, and it kind of goes into furniture I won't see. But I know that there's a huge scratch on the side. Why would I accept a fridge like this? I actually paid for a fridge that doesn't have a scratch. So I don't want it. Well, they said, look, let us have our corporate office give you a call. Okay. So in 5 minutes, some lady calls me up and says, look, we understand and we apologize for this. And what will make it right? And I said, if you knock down the price a little bit, I might be happy with it. And she goes, how about a $500? And I'm like, okay, good. Thank you very much. So I got a discount for $500. I got a fridge that actually has a scratch on the side, but it isn't a furnished kitchen, so I don't actually see it. But I know it's there. But for that peace of mind, I got a $500 discount on the fridge. So the same thing with the reservations by the inspection company. It is usually reported to the exporter and then the importer through the banks. And the importer and the exporter will negotiate. And the importer actually, if it is major enough, that has a right to decline, except I don't have to accept it. But the exporter can actually sweeten the pot and basically say that, how about we offer you a discount, or we'll give you a cash, whatever. And these reservations can be accepted. But once everything is accepted and reservations are through, inspection company gives us a little document that says check. Then we'll go through government. So government can also inspect. You could actually have a government officials, customs officials at the port who may want to just open the container, literally, go through and the merchandise, the products, and they may want to actually inspect. So they may be inspecting for any illegal activity. They may be inspecting for any sort of permits that we needed to acquire. They may be inspecting for quotas. Um, if we've had any sort of subsidies from the government, tax claims that we actually had, and all of that can be inspected at the port. They literally, any one of these parties literally can open the container and look and inspect. And it does happen. I mean, it's not like, every container is inspected, but on the other hand, every container can be inspected. Um, and then you actually have the representation from the banks. Now, usually, and remember, these are correspondent banks and they trust each other, and that's the condition of their correspondence. Usually, you actually can have a person or persons from one of the local banks, so the exporters bank, and they might actually go through all the necessary documentation with the logistics company, insurance company, inspection company, the government, and all that, and then they could formalize the day of delivery documentation. Now, at that point, once everything is clear, they will have the logistics company, and in a lot of the cases, you could actually have the ship captain to sign off. So depending on how the port is organized, how the ship is organized, how the logistics company is organized, you actually have some authority that will actually sign acceptance of these goods on board, and then they will use the very specific terminology calling on board free and clear. Now, once it's actually on board free and clear, at that point, actually, exporter fulfilled its obligation and the letter of credit is actually fulfilled. Finished, finito. And at that point, if the LC is at site payment, then the payment becomes due immediately that day. If it is deferred at that point, as soon as the goods are on board, free and clear, the clock starts ticking. And if it is, say, a month, then you have a month to pay from that point forward. So when I say the letter of credit is finished, matured, expired, we still have the the details of the LC to carry out. Like, for instance, the payment becomes the leftovers, if you will, of the letter of credit. And if there are any contractual obligations by logistics company, they will be carried forward. Insurance company, obviously the policies do not expire. They actually are all the way through delivery, inspection. We will also get inspected on this side of the port. And then the government, well, we actually have transit country governments, port authorities. And like I said, if you're going through, say, Gibraltar or Panama Canal, you'll actually have those canal authorities to go through. And then once we actually receive them here, the customs and duties here will also go through. However, the requirements of the LC that requires the exporter to finish at a certain date and then deliver them onto the ship without harm and without any damage and good condition and all that, those stipulations of the LC will be will be considered done, fulfilled. So now that we're done with the deferred and at site, we also have a letter of credit with respect to the payment, who is confirming the payment. So when I actually said who, obviously the importer has to pay. However, the issue is, what if the importer is not able to pay? The importer is defaulting. The importer is a fraudster, and there's an issue, and the importer just simply says, I don't want to pay. I want to back out. Go sue me. Yeah, do whatever you can. So in that case, obviously you have trouble. But what we are going to do while we are at this stage, we want to make sure that as an exporter, we get paid no matter what, right? As an exporter, we want to get paid no matter what. Even if the importer refuses to pay, as an exporter, we will want to be paid no matter what. It's very simple. So then that's what I mean by who. What we're going to require as an exporter is for the importer to get some sort of a collateral or a cosign. Now, we in the letter of credit language, we refer to this as a payment confirmation. We need a third party to confirm that they will pay the letter of credit upon delivery on board free and clear, given the stipulations of the letter of credit, meaning deferred or at sight, to the exporter on the agreed upon date, period. Now, who can confirm? A lot of the cases, it is the exporter bank who's requesting the confirmation and the importer's bank who is making the confirmation or who's giving the confirmation. Obviously, no bank will give a payment confirmation unless they have collateral or they have some sort of a guarantee from the importer that the payment will be going through. So for a payment confirmation, importer's bank will require either an account with the money in it, or they will put a lien on the house, or they will have a corporate stocks on lien or whatever. Some sort of collateral that if the importer backs out of the deal and they don't want to pay, and the importer's bank is asked to provide a payment confirmation, then the importer's bank will be paying regardless, and then will turn around and execute whatever collaterals they have taken. So not every LC has a confirmation. However, in my experience, I worked, very close to a decade in international trade finance, and I have never seen an unconfirmed LC. So hundreds, if not thousands of LCs that I worked through in correspondent banking, and I have never seen an unconfirmed LC, not a single one. However, can it happen? Yes, it can happen, but I don't see how. However, with the payment confirmation, again, who's requesting it? The exporter is requesting it through the exporter's bank. Who is providing it? Well, most of the time, it will be the importer's bank providing the payment confirmation. Obviously, importer's bank will require collateral for it, and then they will also require a payment, a fee. No bank will actually be will give you a payment confirmation for an LC unless they actually get paid for it. So they will ask some sort of a payment, a fee, something to make their payment confirmation, to give you that payment confirmation. Now, you may actually find those fees to be too high, or the importer's bank may require collateral that's too much, and that you may actually find a confirming bank or a payment confirmation bank that's completely different. That has nothing to do with the entire transaction. So in this case, you actually may want to have a payment confirmation bank. Now, again, this can be any bank. In fact, it doesn't even have to be a bank. It can be a person. The whole deal is about the exporter accepting this. Now, remember, the payment confirmation is done to make sure that the importer does not default on payment. And no matter what happens, exporter wants to make sure that the payment is done. He gets paid. So usually the importer's bank is the safest bet. However, sometimes the importer's bank is too expensive or they require collateral that's too much. And in those cases, there might be, as an importer, I might actually look for a third bank and ask for them to help me out. So let's just say that in our example here, we work with Bank of America and Bank of India, and let's just say that Bank of America is giving me a hard time. And then what I would do is I would go to, I don't know, say Mattery Bank. Now, from the exporter's point of view, they will look at Mattery Bank. It's a local bank, and they may not accept it. They may say, well, we appreciate the Mattery Bank, but that's not okay for us. We want something, a bank that we find to be more internationally recognized. So in which case, I could start shopping. I could go to Citibank, I could go to Chase, I could go to Capital One. I mean, I could go to any one of the banks in the US within my vicinity, and I could ask them to give me a payment confirmation. And then let's just say the Chase accepted to give me a payment confirmation that has better conditions compared to Bank of America, who's my bank in this example. And then the exporter might look at it and say, okay, well, Chase is a big bank. I accept. So in which case now we will have an exporter's bank, we will have an importer's bank, and we will also have a payment confirmation bank, which is in a way importer's bank. A side note, however, that the payment confirmation bank does not have to be in the US or in my location. I could actually find a payment confirmation bank in any country. And this is where it gets fun and tricky and sometimes very profitable. The Because the payment confirmation bank and the importer has to have some sort of collateral relationship. The payment confirmation bank usually is a local bank. However, if I'm a corporation and I'm international, I might actually have relationship with banks in other countries. Like for instance, if I'm a company who has regular dealings with, say, in Brazil, I might actually find a bank in Brazil who would be willing to give me a confirmation, a payment confirmation. Now, again, the Brazilian bank has nothing to do with this transaction. What I'm doing with this example have nothing to do with Brazil. The exporter is not in Brazil. Importer is not in Brazil. But for some odd reason, whatever the reason may be, I found a bank in Brazil who would be willing to give me a payment confirmation. Now, as long as the exporter's bank is okay with that, then I can actually get this confirmation added to the LC, and then that would fulfill that who part of the transaction, the payment confirmation. So once I have the how long, and this actually can be any time frame, the letter credit can actually be for a few weeks, for a few months, for a few years. In fact, it can be a standby letter credit in which you do not have a maturity date and you actually have an ongoing letter credit and conditional maturity. Then after we define the penalties as to what happens if you're late, what happens to the reservations, what happens this, what happens that, these can be quite detailed. And then we talk about the payment details. And this literally is when to make a payment, and usually about whether it's a deferred or an at-site payment. Then we talk about the payment confirmation. Not every letter credit will have a payment confirmation, but an unconfirmed LC is really not that kind. So most letter credits will have a confirmation. So if a letter of credit or the exporter requires a payment confirmation, then it can usually be the importer's bank who's providing the payment confirmation, but it also can be a completely unrelated party, usually a third bank, who would be the payment confirmation bank. Right? So perhaps I should take these down a little bit. Like this. So now, just one more terminology, and the idea is within this process, there's the terminology for a banker's acceptance. Now, banker's acceptance is defined usually as a bond, which is fine. However, you need to understand that it's a conditional bond, which literally is it's a document that finalizes the letter of credit. Meaning, once we started with a pro forma invoice and we have all these issues figured out, and then we have the banks, the companies, and all that involved, and then we have the invoice and we have the letter of credit assigned, and then the exporter builds the product, makes the product ready, and then delivers it to the ship. And remember that day or that short period of time when the container is now at the port, you can have any one of these companies to have an inspection of the actual container. And over the 10 years that I worked in banking, there was a couple of times that I actually wanted to go and see the product. I mean, I just wanted to see that what we were doing were not just numbers, but they were real. That I wanted to see the products, especially products like cars and motorcycles. And, they were fun to look at. And so the banks have the right to inspect logistics, insurance, inspection, the government, and all that. But once that day, everything is actually signed, all the reservations that inspection company found are met or affirmed. And then, the logistics company or the shipping company actually accepted the goods on board. And then they actually give you a document that says all these parties are okay with the transaction and the goods are on board free and clear. Now, at that point, the exporter's bank and the importer's bank will sign off on that document. That literally means that the letter of credit requirements for the delivery of the product to the board has been fulfilled. Now, once you have that document, you will have the seal of the exporter's bank. You will have the seal of the importer's bank. And usually, the reason that this is referred to as banker's acceptance is because both parties accept that the letter of credit stipulations have been completed. And therefore, from this point on, the only thing that's actually missing in this transaction is the payment. And therefore, the entire letter of credit file that became thick and thicker and thicker through the time, because you have all these documentations that make up the file, is now reduced down to one-page document or a few pages of a document that simply says that all requirements of the LC is now fulfilled, and every party to this letter of credit is or has signed off, and both exporters bank on behalf of the exporter and the importers bank on behalf of the importer are now accepting the finalization of the letter of credit. Now payment is due. Now at this point, we refer to this document as a banker's acceptance. Now, if you look at banker's acceptance from econ perspective, finance perspective, it actually says it's a bond. And like I said, it is a bond because it basically says make a payment. However, it has a special meaning in international trade. It finalizes the letter of credit and it stipulates that the only part that's missing is the payment. And so it is more of a conditional bond rather than just a free bond. So it is important that you understand that banker's acceptance has a little bit more to it for the purpose of international trade than the usual banker's acceptance that bonds or promissory notes are written. So at this point, we actually concluded our letter of credit, and let's say that our letter of credit is, let's give an example, right? Let's say that for our letter of credit, it is deferred 30 days and confirmed by the importer's bank. So what is being confirmed? Well, the payment obviously is being confirmed. It's a deferred payment at 30 days. Simply means that once the goods are on the board, free and clear, the payment needs to be done by the importer within 30 days, at max 30 days. And that's about it. So now what we're going to do is on Monday, we'll talk about how to finance this thing. And then we'll talk about the Exim Bank and how to finance pre-shipment, post-shipment, and all that. So again, thank you very much for working with me. I really appreciate your understanding, and I'm hoping to see you guys soon, and hopefully all be well. So please let me know if there's any questions that you have, and if I can be of assistance. Thank you so much, and take care now. Bye.